Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us on the show. Mayuresh, first comment on TVS Motors, miss on the margins, miss on the profitability compared to expectations.
Good afternoon, Rima. Obviously, I think the stock has moved up quite significantly over the past few weeks and months, has been an outlier and an outperformer as far as the two-wheeler space is concerned. I think it's a marginal miss on the margins against what the street expectations were. But I think a large part of the street is getting perturbed in terms of how numbers will play out in the second half. There has been a good push through as far as the dealer or the inventory pipeline is concerned in lieu of the festivities. But are those numbers going to get converted into actual sales? Our sentiment is still very, very strong when it probably comes to the auto pack in general. I think that is where the apprehension probably lies. And that is where I think the softness might come through. If numbers probably don't go through or inventory probably remains at the dealer end, is there a discounting factor that probably comes through by the end of this year? Does that have an effect on margins? How is the new portfolio and new product launches, specifically the EV launches, expected to play out in view of competition? And obviously valuations to comprehend with as well. A large part of the two-wheeler pack, I think valuations much higher than the average mean standard deviations. And therefore a marginal miss will be probably booked into as you're seeing right now. But it all depends on management comments. I think if the commentary is robust for the second half and the management sounds very, very optimistic, you might actually see a bounce back come back tomorrow.
Mayuresh, Persistent and Coforge, these were stocks which have done well, and yet you've seen a 10-11% kind of rally. What would you do now?
Yeah, so Rima, I think the numbers have been surprisingly very, very good. So if you probably look at both their numbers, constant currency growth, dollar revenue growth has surpassed expectations. Obviously, I think the kind of trajectory that the management is now looking at in terms of the order backlog that both these companies have, they're probably looking at very strong quarters even in Q3 and Q4, which are traditionally supposed to be soft quarters, both in terms of furloughs and Christmas holidays for Q3 and Q4 when the discretionary budgetary patterns probably get determined. But looking at how the order book is getting placed, the pricing for these orders as well, and the expectations in terms of a strong recovery, in terms of the strong platforms that they probably build, you look at Persistent's presentation and the platform that they are building, and the acceptability of this platform, I think is getting well recognized across industries. And that is a big, big positive. Similarly for Coforge, I think the expectations in terms of stability, in terms of margins, and expectations in terms of all their core sub-segments actually doing well should augur well. So I think earnings have been a beat. Management commentary sounds very, very optimistic. Obviously, the stocks are not cheap, even. They are expensive, to say the least. They're trading at late stage basis, as we see in markets with India. But as a disclaimer, we've always mentioned this time and again on your channel. It's Persistent, Coforge, emphasis is some of the stocks that we hold in our global portfolios. We continue holding that. And I think we will hold that, looking at how commentaries are plotting here.
Okay, all right. Mayuresh, thanks very much for that. Mayuresh, some final thoughts. Interesting life insurance numbers as well, right? ICICI Pru was not quite that great. SBI Life looks a little better. What are you liking? What are you buying, or what are you avoiding in insurance?
So within life insurance players, I think SBI Life is something that continues to do well, in our opinion. Again, I think need to see the numbers in greater detail. But with the product portfolio that SBI Life has, looking at HDFC Life, ICICI Pru, even Max, which came out with numbers yesterday, they have done tweaks in terms of the budgetary changes that have probably happened. And because of these tweaks, VNB margins have definitely taken a hit. Because of that, the commission charges for all three players have incrementally gone up. They will stabilize at some point going forward. But I think the general product mix that SBI Life has, the expectations in terms of their overall expense ratio as a percentage is far, far lower than its peers. And therefore, I think the growth in embedded value over the next few quarters should be stable and should compound at a very good pace. So I think SBI Life should be within the life insurance place is something very enough.
The margins have seen a bit of an uptake. Margins have come in at around 27.5%. That compares with around 28%. But I think we had a poll that was up for you on the screen, and it's a little better than what the poll threw up. Any view on this one, Mayuresh?
So Nigel, again, we'll have to look at the numbers line by line. But generally, I think if you're probably looking at numbers seem to be stable in expectations with what the market expectations were. Obviously, I think two key factors for Syngene. One, I think how the Malaysian facility actually hooks up and ramps up is going to be extremely critical. And the second element, obviously, is the core business itself. What kind of consistent growth are we expected to see within the core business? And what kind of monetization can probably happen with the global innovators as well? Prima facie, the numbers look okay. So I think the stock should respond, I think, positively with these numbers, and the commentary probably will.
All right. Okay, Mayuresh, thanks very much for all the thoughts.